Let's get you updated on our grain trades, shall we? We'll take a look at our quotes provided by Bar Chart on the corn market. We are hanging on to gains here this morning. Let's see where we are right now. We have the March corn still 7 3/4 higher. We're at 5.79 1/4, within a couple of pennies of our high of the day. We're off of our overnight and early morning low by a dime. In the soybean trade, we go to January, 9 1/4 higher. March also 9 1/4 higher. It's now at 12.44 1/4. That's within just a penny of its high of the day. And, well, look at that, Shazam. I just gave the price, and it changed to a new high for the day, 12.45 1/2. Now it's 10 1/2 higher. So you're welcome. All right, let's take a look at the wheat trade and see what's going on there. In Chicago wheat, here you have March, 19 1/4 higher at 8.09 3/4. That's within a couple of pennies of its high of the day, and we're 20 cents off of our earlier low. In the Kansas City market today, you have March now 19 1/2 higher at 8.38 3/4, and that's just one tick from our high of the day so far. Minneapolis wheat, we have March now 14 1/2 higher at 10.34 1/4, 4 cents from its high of the day. In the cotton market, we now have that March contract quoted at 103.49 cents per pound. That's down 70 points on the day. Ted Seifried is with Zaner Ag Hedge, and he joins us right now from Chicago. And Ted, a bit of a turnaround here on a Thursday. Some folks were saying, well, that's about time. What do you think?
Yeah. Yes, Marlon. Well, you are welcome indeed. I think the combination of you and I together make new highs in grain. So we should just do this all day, I feel like. But
all right, we'll take that. Yeah, if that's what it takes. Okay.
Well, listen, as we've been talking about kind of all week, the initial response to Omicron is panic, and we saw that. But now that the dust is settling, I think we're getting back to the idea that, hey, how has this gone for us in the past year? And with this problem, with COVID, the answer from the government has been to throw money at this problem, and it's caused inflation. And so you take markets that have some already fairly bullish fundamentals, and in that I mean the grains, for example, and we should be really, the reaction should have been positive. So now that the dust is settling, I think we are now looking at the more positive aspects of these markets. We had export sales this morning, which were really quite good. Maybe not quite as good as the week before, but hey, it was a holiday week. And we had daily sales to China and unknown destinations of soybeans. So now soybeans kind of picking the ball up and running with it, sort of taking the lead on the day, even though it was corn earlier. Also look at wheat. And now if you're an end user, I feel like you're sitting here saying, wow, that was my chance. That was my opportunity. But maybe I didn't get enough bought because I was, worried about catching a falling knife and all this panic and uncertainty. But now that the dust is settling and markets are starting to rebound, you kind of feel like, oh boy, we might have some guys that are going to have to chase this here now. I still think there's good reason to add more premium to these markets between now and the end of the calendar year as we await South American weather. There's still a lot of risk with that, even though right now it looks good. But as we were talking about before the break, there's talk about El Nino again or La Nina again. And again, risk is out there. Until that crop's made, we need to have some risk premium in this market. So I think there's more upside potential. I still think we're going higher through the end of the calendar year, barring some major new event, which again, this day and age seems to happen every, month or two. But yes, all things considered, everything that we know right now, I still think there's higher trade for the grains in particular between now and the end of the calendar year.
Still makes one wonder now that most of the grain has been put away. The spring planted crops, the corn and soybeans, have been put under lock and key for the rest of the year. It's going to take a little more incentive to pry that bin door open now and get that stuff out on the cash market. So, yeah, good ideas. Thanks for sharing that, Ted. Stay right there. We'll come back in a moment. We'll take a look at livestock trade right after this. Come on back. We're back with Ted Seifried of Zaner Ag Hedge. We had export sales numbers this morning. We had beef and pork numbers, and they were pretty good this time around. On the beef side, we had over 30,000 tons, 32,000 to be specific. And on the pork, for this year and next year, 45,500 tons. And China was in there as a buyer this time around, so they are back. I think they bought like 12,000 tons of pork. Let's look at our current prices right now on live cattle, on the big board anyway. We currently are higher. We have February 55 cents higher at 139.15. I take you back to the fact that corn is also fairly sharply higher. Feeders, they are feeling the pressure from the corn, but they're not down very much. January down 42, March down only 40 cents now at 167.50. They're off of their earlier low of the day by about 60 cents. Lean hog trade, you currently have the February contract down 60 cents at 79.52. They flipped around and went about $1.30 off their earlier high this morning. We go back to Ted Seifried of Zaner Ag Hedge in Chicago. When it comes to the hog market here, Ted, this time of year, there's a lot of demand for hams and that sort of thing, but is the wholesale purchasing already done for that now?
Yeah, holiday ham season. I don't think it is. And you look at the December contract that's been under a lot of pressure. I don't think there's been that urgency for packers to go in and buy aggressively. So I think there's more buying to be done. I think that December contract has some upside potential yet before it runs its course. But overall, I'm still fairly bullish for hogs. Now, the problem is we had a fairly weak close yesterday. So the export sales by themselves weren't enough to keep us going higher here early in the trade today. I'm optimistic that we find some footing by the end of the day and start coming higher again. And if we can do that, then the chart all of a sudden looks good. And then maybe your commercial buyers start to feel a little bit more pressure there.
Okay, well, I wondered about that. And like you say, it's that time of year, but you just don't know how long this will hang on there. So I'm glad you clarified that a little bit. Thank you, Ted, for joining us today. And we'll talk to you real soon here. Once again, Ted Seifried of Zaner Ag Hedge. He's located in Chicago. And Janet, that's a look at our livestock trade.